Alexander Friedman, you're CEO of the GAM Financial Group, which has presented its half-year results today. You've embarked on a ambitious growth strategy. Can you explain us in a little bit more detail what this is about?
Yes, thanks very much for talking to me. GAM is a great company, but it hasn't been growing in the past the way I think it should. So there are really two prongs to our growth strategy. The first is, do we have the right products, and where we do, how do we amplify our sales and distribution and our marketing impact on those products? And that has to do with simplifying our product range so we can focus our resources on what we have that's best positioned. We're doing that. We are in the process right now of going through all of our 170 strategies, deciding which we're going to merge. We've merged 12 already. This will be done by the end of the year, and focusing our resources to grow accordingly. Second, do we have the right products? And if we don't, we'll acquire them. And as we announced today, we acquired a real estate finance business, the Renshaw Bay real estate business, which comes with about $1.2 billion of committed capital. And we'll continue to add to our product suite through acquisitions in credit, in distressed, and in equities.
You're strong with institutional clients. There have been some outflows with retail clients. How do you think you can tackle this?
Yeah, it comes down to performance. The retail channel is particularly sensitive to short-term performance dynamics. So in our biggest fund, our absolute return bond fund, we had a tough end of 14 because the group was contrarian in their positioning that interest rates in Europe, they thought they should be short on duration, and they were correct. So in 15, performance has ticked up quite a bit, and we've actually seen the outflows turn to inflows on the retail side.
Swiss franc is a big topic in this year's half-year presentation. It affects your cost base. So what do you think about doing about this? Do you envisage any organizational changes to your group structure?
Well, today we announced a significant restructuring of our operating model. Now, this was not driven by the Swiss franc. This was driven by what do we think the right model to have over the 5 to 10 year period ahead of us looks like. It will improve our efficiency and our profitability quite a bit. The Swiss franc itself, we have a natural hedge built into our cost structure, but yes, we are exposed as a Swiss company, as many of our peers are.
At one or the other point of time, the United States will have a rate raise. When do you think the Federal Reserve will act, and how is GAM prepared for that?
Well, calling interest rates, as you know, is very tough, but I have since last March believed that September would be the time when the Fed would move. I think obviously they're data dependent, so they're looking at the flow of data between then and September, and so far it all points towards a small move in September. Whether it's September or the end of the year, though, it doesn't really matter. The U.S. is on a path towards a gradual normalization of rates. In terms of how GAM is prepared for it, we have 170 different active investment strategies, so it depends on the strategy, and obviously our professional managers do this for a living, so they've thought about it quite a bit.
But do you think the financial markets will be affected by that move, or are they already prepared for what will happen?
Well, that's a good question. I think unlike 1994, it's been well telegraphed, so the bond market shouldn't have a really abnormal reaction, but inevitably there'll be a short-term period of lots of kind of volatility. So I would expect that would be, a couple of weeks to maybe a month of volatility in the markets, which should be good for active managers because there's more dispersion of pricing.
Alexander Friedman, thank you very much for your insight.
Thank you.